Hi, my name is R.A. Kaufman. I've got a 25-year background in digital media marketing. So I always joke that I'm the guy that used data to track you online and get you to buy stuff without you knowing about it. I was very good at it. I've had a number of exits. First two companies went public. And then somewhere along the way, I developed a conscience and decided to do something that actually mattered. And 4 years ago, I got the water bug and decided to see if I could do something about what happened in Flint and make sure that didn't keep happening across our country, and developed a product that detects lead in drinking water in the home that a consumer can use without beakers and pipettes and chemistry sets. And you can basically use it to test your water in real time. It tells you how much lead is in your water quantitatively. It sends the data to the cloud. It tells you all the test results that are happening in your community in real time. It tells the water company how much lead's in your water. It will introduce you to products and services that you can buy to solve the problem in the meantime. As a result of the new infrastructure bill that's just been passed, it's going to help identify the location of all the lead service lines across the country. We're working with over a dozen different water utilities already to get these distributed to low-income families, so we can use this to start finding the lead service lines. Middle-class families will be promoting to using that digital media background, targeting consumers online to get them to buy it. And there's about 75 million homes across the country that need to be measured, of which we expect about 10 million will have a lead service line. So that's my background. We've been working on this for 4 years and plan to be in market in about the next 7 months.
Hi, my name is, can you hear me? No.
It's not on.
My name is Julia Monfrini.
All right, maybe give it yours.
Thank you. Hi, my name is Julia Monfrini-Pive. Great to see you all here. I am the founder of Pace Healthcare Capital. We are an early-stage investment firm backing entrepreneurs in digital health and healthcare technologies. We are based in Chicago, as Mark knows, as my accent will not tell.
You had a Chicago accent there.
I am based in Illinois. My personal background, I have spent 12 of the last 16 years investing in healthcare. The bulk of my career is in private equity, where I have invested over $1 billion of capital in transactions big and small. I was co-head for healthcare services at CDPQ, a Canadian pension plan, where I was in charge of our pipeline and portfolio in healthcare, direct PE for North American and LATAM for a few years. And from there, it was pretty obvious that there were many underserved areas in terms of capital in healthcare where the traditional Silicon Valley funds were not looking, because we were really deeply entrenched in the healthcare system, and it's pretty complex to navigate. And the best companies were not necessarily getting funding just because of pattern recognition from where the traditional tech VCs were coming from. So started Pace, and along the way found many other underserved areas in terms of capital, one of which is women's health. And women's health is actually, at this stage, mostly a consumer-driven market. So meaning women are going to pay for their own health as opposed to insurances stepping up and the overall life science industry looking at funding trials and so on. So we've backed women-led companies addressing needs in women's health as well. And it's a consumer-facing investment strategy, because you do need to find people that can talk and relate and understand what women need. And it's a healthcare tech play on the back end. And so I can walk you through examples of, as I've talked at our last circle, by the time I'm done telling you about menopause, you all wish you had it to join our club and our telemedicine platform. That's led by former editor-in-chief of Marie Claire, Anne Fullenwinder, Monica Molenar, who is a serial entrepreneur that actually I found out is a personal friend of Eddie, sitting here. And she's pretty open about it, a hysterectomy at the age of 40 that sent her overnight into menopause and didn't feel like just going through the hot flashes the way our mothers went through. The third co-founder is Dr. Sharon Malone, Chief Medical Officer and OBGYN, who led a podcast with former First Lady Michelle Obama about a year ago.
Podcast.
Yeah, we have more to talk about.
So just before we go to Mohsin, we met in Cincinnati, and I think Eddie invested in you, and he might be investing in you, so serendipity there.
Or just Mark, great work.
So Katherine Hill Ritchie, are you able to join us here? Are you there, Katherine?
I'm here.
There you are. Well, what excites or scares you about the consumer product services world?
Sure. So a lot of things, actually. So, Nottingham Spirk is a big investor and creator of the consumer product space. There are probably 10 or 15 devices in your kitchen, bathroom, or garage that we actually helped create or invent. I think what's interesting today, what is exciting, is the rapid prototyping and development that we're able to do. As you all know, you need to iterate a lot when making products, and we're a strong believer in the soft launch. And the reason why is because inevitably there are always mistakes that happen. So it's always nicer to take your product out through a soft launch and then work the kinks out. So that is a positive part. But what scares me is, when products are released too early. And, one of the things that concerns me, I live near Washington, D.C. now, is just the list of chemicals that we're able to use and still are getting in our consumer products. So I think there's lobbying to continue to be done, and has been done, on all the chemicals that go into the products that we use every single day and the packaging. So that's one thing that we're working on too, is looking at sustainable packaging, looking at products, especially we've done a lot in oral care, dental care. So, like we invented the spin brush toothbrush and sold that to Crest for $475 million. We're working on a new dental oral care product today. And, we wanted to make sure that, again, nothing in the packaging could be bad for you. That's things in your teeth and your gums are really absorbable, but you wouldn't believe some of the chemicals that are still allowed because in so many parts per trillion, it's deemed to be okay. But the problem is if you're using 100 products that have parts of these chemicals in there, then they really do start to add up. So those are some of the things that scare me. But there are also just amazing innovations happening in the consumer product space, and also even in the business model, the D2C. Instead of, as we saw with COVID, some people weren't shopping as much, but they were shopping at home. And so those business models enabling people and consumers to get products quickly at home has been fantastic for the consumer products world as well. So Katherine, but I could go on and on, happy to answer any questions.
No, we really, truly enjoyed that tour of your facility. It's not Silicon Valley innovation, it's like Midwest innovation. Let's get it done and smart. That was very inspiring.
We invite you all back.
We'll be there. So actually, what you said, there's a Russian expression, choot-choot. So if you have a lot of choot-choots of vodka, you get drunk. And it's similar. We've seen this, you're going to hear about on the industrial side. We really need, and the great thing is they're great investments that can solve these problems. And that's what we like to showcase. So there are a couple people, probably should have been on the tech panel, but everybody's a fintech company. But why don't you just share your story real quick, and then we have another great success story that just came up.
Sure. Thank you, Mark. So my name is Mohsin Masud. I'm the founder and CEO for AKRU. We're lucky to have a lot of support from this group, especially Eddie right here is one of the investors on our cap table as well. Really appreciate the support on that. What AKRU does is we fractionalize commercial real estate. We take a $100 million building, break it down into $1,000 shares, and let everyone not just invest in that building, but we've also created a secondary market where people can buy, sell, and trade those shares as well. So truly adding liquidity to an illiquid market and opening it up and democratizing it so that everyone is able to have an equal opportunity. And no matter what your income level be, you should be able to invest into this asset class and build your wealth over a period of time. Having said that, we are limited to accredited investors only at this point, but there's a large chunk even within them that need a lot of democratization. So accredited investors being anyone with a net worth of over $1 million without your primary residence, but then also if your household income is over $300,000. So most of Middle America, most of people working at P&G, GEs, and the corporations of the world are able to qualify for that. So we want to make sure everyone is able to invest and can take benefit of commercial real estate investing and building their wealth on. But yeah.
Only someone from Cincinnati, like Middle America, people who work at P&G. I understand. Here's another great success story that just sort of is happening in the sort of fintech to consumerish world. Mike Carr.
Great. Hi. Hello, everyone. My name is Michael Carr. I'm the CEO of Amgine. And what Amgine is we're a digital process automation company that helps travel management companies, companies like American Express, BCD, Carlson Wagonly, be better with less people. So because of the pandemic, obviously, and travel is starting to come back, especially domestic travel, there's less people out there that can actually be hired to do the work of what travel agents actually used to do. So in the past, corporate travel was a $1.4 trillion a year business. About 400 billion of that was going through travel agencies, and that means a lot of people have to do that work. And so what we do is we actually read the emails or text that comes in from the travelers, and we process itinerary recommendations all within seconds to a few minutes using AI, our patented AI platform. So we're working with 8 TMCs right now, mostly US. We're based in Toronto. We actually are raising money at the moment, looking to do so.
We don't pitch exactly. So. but the great thing is we made one introduction just to see if someone in our network really understood the space, who understands the space if they saw value in their business model. And it looks like we got a bullseye, which is a great success story.
Yeah, and we find that going forward with this platform, there's, as I said, there's hundreds of millions of transactions that are out there that we can process annually, and we've got a technology to do that.
Great. And so all that said, any questions of these business models or other questions as it relates to the consumer sector opportunities, what scares and excites us? No, this is crickets here. Come on, Gary, you have a question? You had your hand up. I love it. So consumer-oriented questions, media, technology, healthcare, wishing we all had menopause, fractional ownership of real estate, solving the water issues, testing and mitigation. Comments, okay.
Comments.
Yes.
So, having the privilege of working with Mike and Greg and Mark Saynor, I'm John Pagley, by the way. I said to Greg in our conversation a couple of weeks ago that you really are an impact investment in that you are contributing to solving the supply chain problem, in a very unique way. So that's what I had to say. So if you want to expound on that, thank you.
Well, thank you. Yeah, you're absolutely right. I think that what we have seen because of COVID, a lot of the travel agents aren't coming back, frankly speaking, and they need to be able to do more with less. And the problem with travel is it's a laggard industry. It's an industry that frankly, still looks at the same types of screens you'd see 30 years ago. If you're familiar with Sabre, for example, they haven't really moved on from that. So we have basically been able to build a platform that disrupts that, a platform that lets them do more with less, as I said, and really sets them up to be competitive with some of the new companies that are starting in this industry. So for example, if some of you have heard of TripActions, TripActions is a new platform for business travel. It's innovative, but companies like American Express and BCD need competitive platforms. And that's what we do, is we actually make them competitive. We give them the technology to let them be competitive in this industry, and we're really proud of that. So thank you. I think that, yeah, absolutely, we're being disruptive.
Hi, because you're all in consumer space and about data governance, so what are you doing on that level? And are you using any external bodies, or are you looking to apply for B Corp status or something like that? Because obviously no one likes their data to be shared, and if it's what we know from corporations being there many years, that data is misused big time. So what are you doing as new brands on the market to protect consumers? Thank you.
There we go. So, having come from digital media marketing space for a long time, personal private information is something I know a fair amount about, and consumers definitely are super sensitive to it. And now the largest generation coming through the market is millennials and Gen Z. And it's funny because being Gen X, with a forgotten generation, and anybody always says to me, "My God, you have this incredible amount of data. How are you charging for it? What are you monetizing it?" And I say, we don't. Healthcare information is public information, right? So all this information that we're getting about people's homes is democratized and given away for free. Anybody can access it. It has to be democratized, right? It has to be available to the media. It has to be available to academics. It has to be available to governments. It has to be available to everybody in order to solve a problem. And so that is the way that you handle it. You don't monetize it. You make it available to everyone. No, I don't, say, here's John Smith's 123 Main Street, and that's their data. We say, here's a quarter mile, or here's a square block, and here are all the results for a square block, so that if you want to dig in, then the water company can come and dig in, or consumers can dig in. I did want to share an observation now. I raised a lot of money throughout my career, and had multiple exits, and done better than worse. I certainly have crashed and burned a company before too. One of the observations that I've had in the impact space, and this is certainly my first time that I'm in the impact space, is how risk adverse investors really are. So much more risk adverse than tech, so much more risk adverse than hardware or software or fintech or healthcare. It's amazing to me how much impact investors talk about the need for innovation, and talk about the need for change, and talk about the need for acceleration, and then talk about the need for revenue, and talk about the need for traction, and talk about the need for, I'm pre-revenue, right? I have a prototype, I've got data, I've got a product, but I'm not in market yet. I have a list 150 names long who say, come back when you have revenue. Great, I got no problem doing my next round. But when you talk about trying to get people who say to me, oh yeah, I will put money in before your product has gone to market. And it's not allowed to pitch, but it's amazing to me how easy it was to fund a digital media marketing company that had no revenue whatsoever. None.
But were you approaching family offices or funds?
Both. Family offices want to see somebody else do the valuation, want to see somebody else put the money in first, right? Do the hard work, and then they'll say, okay, yeah, I'll come in, great. But the funds that would normally come in first, the institutional investors, absolutely do not want to take risk in impact. And it's unbelievable whether you have an impact fund
or you have a traditional fund that now wants to have impact investments, it's frightening. And like I said, I mean, I've been raising money for years, so I mean, my list of contacts of people I can pitch is a mile long. And you cannot find the people that are willing to stick their toe in the ground, in the water. Yeah?
Yes, Cedric, go.
Additional commentary, Ari, you having the background of raising capital, how are you getting around that kind of chicken and the egg with the revenue and the impact space?
That's a wonderful question. That's why I'm still raising capital. I actually did finally get a lead, but it's a very small lead, but they're pundits in space, right? So it's really, really big names. It took a long time to get somebody who says, this is amazing, you know, I can't write you a big check, but now a family fund or somebody will say, okay, well, at least you've got expertise. And that was what I realized, is I don't need to go get half my round. I can get a $500,000 check, but if it's incredible name of expertise, then somebody can say, okay, that's more important than the dollar figure. It was amazing how long it took me to figure that out. But that's what I finally figured out on how to do it, just to break into impact.
I've got a quick question on the consumer side for maybe for our friend from Canada. It relates to Peloton and sort of the dynamics that Peloton's experiencing, which is a little bit of, you know, stock reduction because they didn't play sort of the return strategy as clearly. But I put it to you in Canada because it seems like you would have some sort of, you know, arbitrage opinion, because I think the border is still, you know, pretty tight, and I think more Canadians are still staying at home and having the distance. But how would you advise like a Peloton to, you know, which is, you know, the bike equipment and the indoor exercise equipment on a strategy here?
It's a great question. I am actually based in Chicago.
Chicago?
Which Mark may correct me, but I think it's on the south side of the border. On Peloton, so Peloton is actually considered a healthcare tech investment, which for me as a healthcare tech investor still somewhat shocks me. It's a consumer-driven business. They need to want you to buy their equipment and join their classes. They don't measure actually how much your body feels, your wellness feels, how often you're really there. They don't track outcomes, which is the number one thing we look at for an investment when we go into healthcare tech. Is this something that will actually put an inflection point on patient outcomes or decreasing cost of care or expanding access, which is still something important in the US, as not everybody gets access to care. But it's not what Peloton is looking at. I can't really talk about the stock. I follow it as well, but it's not something I have a professional opinion about. I'd say they've barely scratched the surface of what they can do. There's a lot of space of improvement to gain market share, even still in the US, whether it's in terms of volume or services they can place at home, or now actually what they started slowly exploring, but it's closing that loop and going back as to what is it you really do with their platform, how is it improving your health, right? And as we shift towards them being a digital health platform or tech platform, how are they closing that loop, which is not done right now? But to me, it's a stock to track in the long term.
Could I just add, there's two people, you mentioned Peloton. So Peloton just announced a $450 million investment in, not Chicago, but Ohio. And what attracts them is we have a special tool in the toolkit that Joe, just 30 seconds of what Ohio did for Peloton and what it can do for others here.
Yeah, no, absolutely. Ohio is very unique. Ohio is the only state in the country that has privatized our economic development arm. That is funded by liquor sales in the state of Ohio. We're looking for, once Ohio goes recreational, to use recreational to fund that as well. Cannabis. So through that, it's very unique, the process we do have in Ohio. And with that, you're seeing not just HQs, but namely companies from the coast locating their second offices to Ohio. And Peloton is an example of one of the large companies that wanted to locate there due to talent and what they're getting from Jobs Ohio in the state of Ohio.
It's about $200-300 million that can invest every year direct into companies or funds. you said you weren't getting funded, or we're not putting funding into impact, and I wanted to introduce Rich Nespola, because he's funding impact investments from a couple angles, including credit.
Yeah, so just a commentary, you know, our family's kind of incubated a bunch of strategies and kind of done a bunch of investments, but the other thing is just looking at the pools of capital that you're going after, right? So it's not the old white-haired folks that are going to buy into the strategy. It's G2, G3, G4 families that have a greater orientation towards sustainability and impact and kind of equitable treatment of others that you're going to have greater resonance with, one. So, I mean, I'd encourage you to look at groups like Nexus, groups like And Impact, Align Impact, et cetera. There's a whole consortium of folks that kind of are tailored to that kind of orientation for investment, one. And then two, I'd say foundations can make PRIs, right? Program-related investments, which are tax advantaged in a bunch of different ways. And that's kind of opened the aperture here. It's been around for a long time, but for what you're doing, right, and for what others are doing on the impact space, it's just a much better way to take advantage of foundation funds that can make investments, quote unquote, below market rates of return or equivalent, right, for something that has meaning and aligns with their strategy, right? So it's typically an area that's underrepresented in terms of where people are going for pools of capital for support. It's also probably a little bit easier to navigate because you can go to a place like Foundation Source and a whole bunch of other places that list everyone's kind of returns, if you will, that kind of segment by size and what they invest in, quote unquote, or support, to create that alignment filter for yourself, right? So it's all just kind of self-directed. Last point for you is I've been the kind of the chairperson of an organization called Earth Echo International, which was founded by Philippe Cousteau and his family, and all we do is water sustainability. So happy to talk to you about trying to get your product in their hands.
I'm going to chase you out the door.
No, don't chase me out the door. I'm right here. So. Yeah, so for what we've been doing, we kind of realized that there was a gap in kind of private credit and financing impactful consumer brands in the natural and organic food, beverage, beauty, and pet market. We really kind of love it from a standpoint that it's a non-correlated asset class, but we really felt that for these great entrepreneurs and pockets of capital that were supporting this initiative towards health and wellness, they were getting absolutely killed on the cap table, not getting a fair share of their return because it's a capital-intensive industry. So they have to go back to the equity well every single time to fund their growth and trade spend and promotion and R&D, and then have nothing to show for it in the end, right? So for every RX bar that you read about getting acquired, or every kind of buy that gets sold to Dr. Pepper Snapple, there are hundreds of other companies that are out there that are in need of capital but are getting absolutely crushed, right? So from that standpoint, we kind of spend time kind of optimizing that capital structure for them. Also, too, investors get stuck in the equity forever because not all these companies exit, right? So we create a financing mechanism that kind of aligns interests across founders and investors and those that want an impact. So that's what we've been doing for our family now for the past couple of years.
You know, Mark, I was going to say, when we were talking about Peloton a minute ago, that a core part of their model is obviously managing for churn, right? So utilization, maintenance of utilization, frequency of utilization, fallout, making sure that the bike doesn't turn into a clothing rack. And when Joe mentioned that Ohio, and he said cannabis, and then he said, I thought maybe they had figured out how to keep people on the bikes.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.